Well, a day of giving up of gains. So any hopes of a very sharp recovery have been put paid to in the session today. Look at this. And by the way, just before we continue the conversation on what our markets have done, I would love to see what Europe is doing. I would love to see what Dow futures are as well, just to put into perspective what the global mood is currently. So our markets have given up all the gains, and leading the losses are financials, by the way, because HDFC Bank, life insurance, etc. are all down, and we'll talk about them. But effectively a day wherein the hopes of a sharp pullback have been sold into. That's the key point. Remember, a lot of quant indicators are still not quite there in the range where they would recommend that you would go out and buy the markets per se. This is Nifty Bank, of course, leading the charge lower. We will get the global markets in a moment. And the mid caps and the small cap indices, actually the small caps were up over 2% at the start of the trading day. In the green, mid caps, small caps, I would reckon probably in the green as well, but just barely so. Okay, let's get the heat map, or let's get the global markets, whichever way. So if we get the heat map, we get the global markets after that. Get the heat map up on the screen. Maybe it's still deceptive because it shows you equal number of stocks in the green versus the red, but a lot of stocks have come off. HDFC Life and SBI Life, for example, off significantly from the levels that they were trading at. Bharti Airtel, which was up about 1%, is down about 1.7%. There is weakness in HDFC Bank, Mahindra and Mahindra. So top losers in the session today. What's done well? Well, a mix. I mean, metals, a lot of shorts yesterday, so a bounce back. Britannia, so some bit of an FMCG flavor. It's actually a multitude of stocks which are doing well. It's not a particular theme which has really done well in the session today. Across the board, we've seen some bit of buying still there in select names, but I think the sellers occupy a bigger place because financials and particularly life insurance have been hit very, very badly. Just mark Europe and what Europe is up to. Not that great, just about flattish. So take your time, no need to rush into it. Dow futures, if we can, before I hand it over to Tamanna, 0.5% in the green, not quite the 1% that they were there. So global markets too, a bit more muted than what we would have liked. But mid caps and small cap barely holding out, Tamanna.
Yeah, absolutely. I mean, it's definitely been a phase of volatility, which I suspect you will see for some time now. Remember, a massive scare like we saw on Monday doesn't just fade away out of the blue. So those basic concerns will remain, whether it's what's happening in Japan or whether it's what's happening in the American economy. But having said that, small caps still faring slightly better than the frontline indices because perhaps your banks or your banking stocks are pulling down the front lines even more. I don't know if you can pull up an advanced decline ratio and just give you a sense of how the market breadth has fared over the day and what's been happening over there. So as you can see, the mood really turning towards the last bit of trade where completely you're seeing sellers coming in. Could it be more foreign funds who are coming in and selling is something that we'll know when we get the fund flow data, but it's possible. Remember, you saw the largest amount of foreign investors selling yesterday in trade, over 10,000 crores, largest since June 4th at least. Maybe that's what's happening. But if you look at it, the advanced decline ratio, of course, the declines have it, but not too skewed if I were to compare to even 24 hours ago. Let's pull up some of the key gainers, and sectoral indices over here will give an idea of what's really been working. Realty stocks buzzing through the day on reports and hopes really that there is some kind of relief on the removal of indexation from real estate, which was announced in the budget. The finance bill will be passed today, and well, there are hopes that maybe the finance minister comes in and gives some relief. But till then, you have that sector buzzing. Metals are seeing a bit of a recovery after the dropping that they saw. IT is holding up again, recovering largely. On the losing side, of course, you have the Nifty Finance, Nifty PSU Bank, Nifty Bank. So it's, it's all about the financials which are suffering today. It's a good move that the India VIX is down as well. So that's telling you that you're probably seeing the after effects of the bruising, but nothing too scary happening. We'll pull up the top gainers and losers of the NSE 500 before we get our conversations going for the day and see what's happening there. I mean, Symphony is a runaway success because of numbers. The Q1 numbers is something that the street has loved. Over 19% up. Same with Triveni Turbine again. Seeing the impact of numbers. A lot of stock-specific action is what you're likely to see. On the losing side as well, Marico pull back as well as the Bangladesh impact. And I'll pull up a few of the textile stocks as well to talk about it a bit. Marico, nearly over 40% of their global revenues actually come from Bangladesh, which is going through turmoil right now. That's probably why. Let's pull up a Gokuldas, Vardhaman, some of those textile names to see what's happening there. And this sharp up move, they've actually come off its highs, but 10% up. The reason why you're seeing that in some of these stocks is the hope that international brands like Gap and H&M that were getting their garments made in Bangladesh might move to India. Whether that happens or not really remains to be seen, of course. So these are some pockets of excitement in the market today. But overall, I would think cautiousness has crept up in the second half of the trading day, Niraj.
Yes, indeed, and maybe rightfully so, but considering that this situation isn't quite deciphered completely as yet. Kush Boda and Aditya Agarwala joining to talk about how are they approaching trade this afternoon. Kush, is the sentiment different from what was there in the morning? And are the trades different too?
Hey, hi Niraj. First of all, very good afternoon to you. Well, not really. I know the indices are seeing deep red, at least the financial ones, but I don't really think that, it's as bad. I was listening to you and Tamanna just a while ago. I think this is perhaps just a hangover of what it was yesterday. And I think this is more owing to the domestic factors. And by that, I mean the expiry. I mean, purely, expiry. And the reason being, today's a Fin Nifty expiry. The Bank Nifty is down, but if you pull up Fin Nifty, that index is about a percentage down. So this is more of, that weightage playing on the index, which is dragging it lower. Now, on the downside, we've got this massive base, put base at 24,000. So I think that should hold up in any case. The 50-day moving average and yesterday's low close to that 23,800 mark will act as a support. So not really as worrying. Sure, the indices have come off the highs. Banking index has gone deep in the red. Some of the stocks are also seeing profit booking, but I don't think this is as much a sign of worry. Also taking heart from the fact that, even the global indices, the European indices and the Dow, again, off the highs, but really not warranting, a real scare, at least until the Nifty holds, yesterday's low.
Okay.
Sorry. Hi, Kush. Hi, Aditya. Great to speak with you this afternoon. Kush, let's start off with the picks at the last session of trade. Because, we're a market where people tend to buy into dips and then FOMO factor comes in. What would be your top, let's avoid FOMO factor picks this afternoon?
Sure. Tamanna, just to give a quick update, I was on the FNO show this afternoon, and we did say that short Bank Nifty around 50,100 mark. So if anyone's got that position, not a bad idea to maybe cover it just for the day. You never know, you might get slightly higher levels to go short on again yesterday. So you might want to cover that Bank Nifty short intraday, that we spoke of. Also, Deepak Nitrite was a call that we initiated for the first target of 3080. The high is actually 3079.70. So I think I'll take it. We're pretty much there. Point being, continue to hold this one if you've got an existing position. Now, as for the trades for the last session, two of them, a buy and a sell. UPL was a trade, that I'd recommended in the show, same FNO show. Just pulling the stop loss down there a little to 520. The targets remain intact, 555, 570. And the only reason for pulling the stop loss down is, just to factor for the volatility. Otherwise, I think we've seen some positive RSI divergence yesterday on it, and along with the entire chemical pack, this stock should also start moving. Metals have been under pressure. Hindalco might see further downside. The 200-day moving average support comes in at 585. So close to that, is your second target. The first target being 600, 625 is where you place your stop loss. UPL long and Hindalco short, and continue to ride Deepak Nitrite.
Okay, Aditya, are you as constructive as Kush, or do you reckon that there could be still some downsides? Is there a short trade, or is there a no trade, or is there a long trade?
Afternoon, Niraj. Afternoon, Tamanna. Thanks for the show. I think markets will take some more time to settle down. It's still early days to call it out a bottom yet on the market. What is interesting to see, Niraj, is the follow-up move after a big fall in the market. If it's usually a gap up, it leads to a correction in the second half of the session, and vice versa. If it's a big gap down the next day, you usually see a follow through by maybe a short covering rally, which takes the market higher. So the first case we saw in morning trade, we saw a big gap up and then markets gave away. I still feel markets will slide further lower from current levels. It's still early days to call it a bottom. Maybe somewhere around 23,800, 23,600 is where I feel market could find its feet over the next couple of trading sessions. And from there, we can see some bit of buying again in the market. Having said that, yes, there are certain pockets which are outperforming. Names like FMCG, Pharma, Select IT. I think Pharma, FMCG should continue to see further higher ticks from here on. And maybe there'll be some pockets which had outperformed big time, be it in the capital goods space or some of the banking space or some of these real estate and realty stocks can see some bit of a correction in going ahead. But yes, overall, I think still early days to go ahead and buy the market yet.
And Aditya, what are your picks for this afternoon?
So I'm going to buy and sell Tamanna. HUL looks interesting to me on the chart setup. Again, as I mentioned, FMCG is something looking interesting. HUL has weathered the storm, and I think at current levels, one can definitely go ahead and buy for a target of 2,900 on the upside with a stop loss at 2,670 on the downside. Second is a short trade on Siemens. Now again, ABB, Siemens, all these stocks had run up big time, and looks like there's a bit of a distribution pattern on all these stocks. So Siemens is a short for a target of 6,300 with a stop loss at 6,800 on the upside.
HUL is a buy, Siemens is a sell this afternoon for Aditya. Now talking about HUL, some of the other FMCG players in focus, and one of them is definitely Marico. Marico, because of the hit it gets from Bangladesh. We talked earlier in the show about textile stocks. I mean, that's an interesting story to understand, because if you look into it, there are so many Indian corporates who have quite a bit of exposure to the Bangladesh market. Now, well, it's not immediately clear right now in the middle of political turmoil how much impact there will be. Interesting to know what the immediate response is. And Mahima is joining us for more on this. Mahima, one sector in focus definitely are textile stocks.
Absolutely.
Yeah, with the hope that international buyers now move interest there.
Absolutely, Tamanna. So as you rightly mentioned, textile stocks are definitely in focus today and definitely the sector of the day. Now, a couple of things why the sector is buzzing in trade. Well, because of the Bangladesh crisis, there is expectation that the kind of exports in textiles that Bangladesh does, the export orders might shift now towards India. Bangladesh at current is the second largest garment exporter in the whole world, and in FY23 they had done exports worth $47 billion. But and overall also in European Union, they have a high double-digit share in terms of textile exports, and this crisis could divert the textile export orders to India. Now, we also spoke to the management of Gokul Das, and they've said that brands prefer Bangladesh due to the kind of capacity that they've built over the couple of years in terms of textile manufacturing, and plus there is cheap labor available in Bangladesh, and plus the advantage of exports from Bangladesh to Europe is that these exports are tax free for them. So overall, this is the view they gave. However, they also said that something that will be in watch out for is that how long this crisis will last, and that will determine whether these exports will eventually shift to India or not. And talking about textile stocks, well, Gokul Das exports is up 9.65% as we speak. KPR Mills is up 11.7%. Vardhaman Textile is up around 4.15%. Also, certain names like Arvind Limited, Wellspun Living, Trident are all up within the range of 3 to 5%. So this is the overall view of why textile stocks are buzzing in trade today.
Yeah, thank you for that. And in fact, we also spoke to the managing director of Gokul Das Exports, who talked about the potential shift of such manufacturing from Bangladesh to India.
Many brands were looking at diversification, but I think the speed at which events unfolded in Bangladesh accelerate some of the thought process of diversifying away from overexposure to that country. So many of the brands who buy a lot from that region may consider going forward to diversify away, and India naturally becomes a safe port of call for many retailers to source from, given our vast supply chain base. So we have a good mill base, especially in the cotton viscose area, and a strong garmenting base as well. So there will be a lot more retailers who will consider incremental sourcing from India. But all of this will evolve over a period of time. Everybody is waiting and watching as to how soon the events settle down in Bangladesh.
All right. So textile, I don't know, Niraj, what your view is. I mean, there is an instant spike in the stocks, but India always had the opportunity to compete with Bangladesh before this crisis. You didn't need Sheikh Hasina to flee to actually, become more attractive to Gap and H&M versus manufacturing companies in Bangladesh.
Yeah, I know that was the argument in the morning as well, and rightfully so. I mean, to my mind, I don't know how you think about it, but two things. One, have mills shut down temporarily? Yes. So if there's a prolonged shutdown, could it help some of the companies? Because would some of the sources look at India? Possibly, maybe. But I think what Gokaldas management said, Tamanna, was interesting. That, for example, the UK geography, UK and Bangladesh have an agreement wherein it's duty-free exports to UK. They will not be able to shift to India because then the duties come into play. And therefore, it's not as easy for one country like UK. There could be complications for other countries as well. We do not know that. So I think those hitches are there. And thankfully, the guy was candid enough, gentleman was candid enough to say that as of now, obviously, we have not even started. I mean, it's just 1 day old, but not thought about it.
Just the other thing to quickly add, you talked about UK, a lot of developed markets which are okay with importing garments made, say, in Bangladesh, Vietnam, India, or any of these countries, have very stringent policies on the labor use, the age of labor used, how that labor is treated, etc. So for any manufacturer, you have to set all of that up to pass, those qualifications. Not that we can't do it and that we shouldn't try to, but there is no justification for a 10% uptick in Gokaldas exports today on the hope that this happens, is fundamentally at least. I don't know if Aditya agrees. Aditya, do you agree with that sort of analysis?
Not really, Tamanna. Actually, we're right. 1 day move, 1 day crisis in Bangladesh doesn't really mean that entire export shift to India and all of that happens. But this is how markets react these days. In fact, yesterday, after market hours, I was just talking to the team saying that maybe we should look at textile stocks. And look, today morning, all the stocks are flying away. So it's how market reacts these days, and most of their gains have given up also. I don't think one should really pay too much heed to that. Once the dust settles down, I think so these stocks will come down to its corrective levels. And anyways, all these textile stocks we're talking about have been performing really well. If we take a look at year to date or maybe 2 years move in most of these stocks, be it a KPR Mill or a Gokaldas or a Vardhman Textile, all of them have done well for themselves. So I think there is a good up move which you're seeing in most of these stocks, just purely go by the fact that fundamentally these stocks are doing well. Charts look extremely well, healthy for these stocks. I think a couple of them still stand out for me. If I name them, maybe a Welspun Living is looking still interesting to me, be it Bangladesh crisis or no crisis. I think this is one stock which can test levels of 210 on the upside. The second is KPR Mills. This is also one stock which I think stands out, definitely looks very interesting on the chart setup, and can see another from here on levels of 1,000, 1,050 easily in the next 1 to 2 months.
Okay. Well, it's a bit here, a bit there for these guys for now in the green. Let's see if this lasts. Typically, it doesn't. Let's see if this does tomorrow. Take a break. Come back with more. Back with India market close on NDTV Profit. Must say, some of the high flyers are correcting. Suzlon is down 3% as we speak, and Zomato, which was up about 5% at the start of the trading day, is now a couple of percentage points in the red. So what's happened to the markets at large has happened to some of the stocks which have seen a really strong rally, whether over 7-8 days, as the case with Suzlon, or just over a couple of days, as the case with Zomato. Dharmesh Kant of Chola Securities with us on the show. Dharmesh, good afternoon. Have you guys told clients to use the dip that has come in to buy, or are you waiting for greener pastures?
Yeah, good afternoon, Niraj. No, we have not recommended any of our clients, or there is no such recommendation from our end. See, Niraj, the problem is in South East, there are headwinds of currency. Middle East, you have a geopolitical headwind. And in West, right from Europe to US, you have an economic headwind which is coming into play. So in such a, and this is one side of the story. The other side is the valuations are still very high. So this kind of, great divide cannot stay for long. So this is a welcome correction which has come into the market. We have been waiting for this from say 23,000 odd levels. So give us, 5-6 days more, 5-7% more correction on the index, and that is where the cherry picking can start. Because definitely at around 23,000, 22,000 odd levels, valuations will again become very attractive and compelling. So till then, we are waiting.
Dharmesh, let's start off with some of the high flyers, right? We were talking about Zomato, for example, and that's been the talking point for the last 3-4 days. Strong results, good reaction. Today, a bit of a pullback as well. If somebody is invested in Zomato, I don't know if you guys have official coverage there, but can you comment on Zomato and what should an investor do there?
See, the trajectory has definitely turned for Zomato and the likes of in the same space like delivery and all. But we have not recommended that officially to any of our clients for a buy recommendation on the same company. So we are waiting. We would like to see a couple of more quarters. But having said that, we are constructive on this space as a great idea. But as of now, let's wait for some more time.
Okay, let's look at some of the winners and losers in the afternoon session. On the winning side are still companies which have come out with decent numbers that the street liked, and that continues since this morning. Look at, for example, look at a Triveni Turbine doing fairly well in this closing session as well. Look at some of the gainers, BLS International, for example, decent set of numbers, which has helped. Schneider Electric has been a winner since this morning. So some of these companies are seeing a good day. I mean, we were talking about textiles. The top gainer on the Nifty 500, for example, is a company called KPR Mills. We had a conversation about how fundamentally they might not be so much to celebrate about, at least in a day. On the losing side, we'll talk about Syrma for a second. Syrma SGS in focus. The stock is, of course, trading under pressure after reporting its quarter numbers. We caught up with the managing director, J.S. Gujral, on the quarter gone by. Listen into what he said.
The business this quarter has been good. We have grown by 92% odd in the total revenue of the company. And as I had said in my earlier calls, that the business mix is seasonal. So in the first quarter, we saw a high proportionate growth of consumer business, which stood at about 54%. Now, this 54% consumer business led to a contraction in the material margin. We had a 4% saving in the operating overheads, and hence the EBITDA margin contracted by about 2%. So very confident that going forward, the annualized earnings which we had guided and the EBITDA margin, the plans remain intact. The high margin business would kick off in the coming quarters. First quarter was comparatively slow on exports also. Exports were only 16% of our revenue against a targeted figure of 20 plus. So going forward in the remaining 3 quarters, we believe and we are confident that the business would come back to normal with the revenue growth of what we had guided, and EBITDA of about 315 crores is in line of achievement.
And Dharmesh, actually, I'll come to Kush as well on this, but Dharmesh, to you first. some of these EMS companies, right, the valuations that they trade at, and does this become a problem that a quarter of miss, even if it's a miss versus estimates, and the corrections that come here? So a view on that, or on Sirma SGS, of course, if you have a fundamental view on this one.
This you have to live with it. I mean, when quarterly earnings, if you are tracking and the companies are trading at multi-fold high valuation multiples, then such kind of a problem does arise. And traders do take sharp profit taking because the view is very limited. Even if you are tracking a company on a quarterly basis, that itself, is advocating of the fact that it's a narrow view which one is taking. So companies like Sirma, SGS and all, they have to look at it from a 2 to 3 years kind of a perspective. It's a growing company, it's an upcoming company in their own space. So I would like to give it a benefit of past this quarter itself. Though we have not recommended in this fall, and the reason for not recommending is because of the market at large. So we are sensing some more correction to play out in next 2-3 weeks, and thereafter when the water settles down, one can look at it. So as of now, the company is good. I'm not judging this company just based on these numbers, the quarterly numbers which they have updated. So maybe one more quarter, and if things starts to improve from there on, which we think will, so we would be having coverage on the same. It's there in the gray list right now.
Okay, Kush, any thoughts on Sirma, Dixon, Amber, any of these?
Well, Sirma, I think the troubles for this one began, late last year, where it started that slide and hasn't really been able to recover in a meaningful way. There was a consolidation and an attempt at a breakout, but that has failed. Today's move has actually brought it down below that 430, kind of support zone. So I think I'll wait and watch before any kind of a fresh entry. On the other hand, Dixon has done exactly the opposite. It's done nominally well. For the most part, with the stock fallen, it's taken support at that 50-day moving average. Again, trading close, very close to that. So if I were to pick, Sirma is a wait and watch at the moment. Dixon is something that you can consider, but given the volatility, keep your stop losses deep, close to that 10,400 level. And on the upside, you could look at 12,250 and then 12,700 as target. So Dixon is a buy, but just that it's a volatile stock. So be a little mindful of that. That's all.
All right, we'll take a very short break at this point. We come back with the F&O picture as we go into a slightly painful close to a day which was otherwise optimistic. We come back with all of those details and what your closing strategy should be after this very short break. Stay tuned. welcome back. Let's take a look at where markets are right now. Looking a little shaky. Not massively in the red or anything. Still above 24,000 on the Nifty. But yes, have given up most of the gains of the larger part of the day. Agam is joining now with FNOQ. So expiry day jitters, is that what we're seeing, Agam?
Well, Tamanna, earlier in the session, we did speak about the possibility of markets coming under pressure because every time we actually see benchmarks take a cut of around 2%, and if we actually do see a green in the following day, it usually is followed by a little bit more selling. And the reason here is that for all the traders who were perhaps waiting to move out of their long positions, were waiting for that little bit of a bounce back, and they take that opportunity, which was provided this morning, to sell into the markets further. That's exactly how it's played out in terms of probabilities as well. We're looking at a 0.25% decline for the Nifty, and now at the moment, the psychological mark of 24,000 does seem like it is in a little bit of danger. Remember that the maximum open interest as far as the Nifty is concerned in terms of puts was also at the 24,000 mark. Can this lead to more pressure downwards? That's a wait and watch. We also need to ascertain whether or not we do in fact see the Nifty close below 24,000. That will be important. The Bank Nifty, of course, has now very clearly lost out on 50,000, and that's where we are seeing further shorts building in. Remember that there's been 100,000 in open interest over the last 2 to 3 sessions that we've seen. In fact, the open interest has doubled in the last couple of sessions. So that's clearly a case of shorts as far as the Bank Nifty is concerned. Now, I was talking about the options market, and remember that I was talking about the 24,000 put, which still has a lot of open interest. But should we see the Nifty move below 24,000 and sustain below 24,000, under those circumstances, we see unwinding of these puts, and that could perhaps lead the markets even lower, the Nifty specifically in this case. Perhaps on expected lines, we're now starting to see a return of writing around the 24,200, 300, and 400 calls as well. Finally, coming down to stocks. This is of course the Nifty Finance, and this has been perhaps the weakest of the indices today, and it is the weekly options expiry for the Fin Nifty, and again expecting the expiry to be somewhere around 22,500, 22,600. But let's move on and talk about stocks then. And shorts in Marico, PFC, TVS Motor Company, though not as much. Torrent Pharma and Deepak Nitrite among exceptions. Among stocks which are seeing unwinding currently, again, a bout of mild short covering for something like a UBL and Naveen Fluorine. I wouldn't want to classify Birlasoft and Chambal Fertilizers because we're looking at marginal moves there once again. Overall, a mixed day of trade, but not the most encouraging signs from the benchmarks.
Okay, thank you for that, Agam. It's a day of mixed trade. Of course, benchmarks are hurting. What's happening in real estate is interesting. Now, I don't know if these expectations of some kind of softening on indexation are going to happen or not. They're speculative at this point, to be honest. So can't really say that you are going to come in and see some kind of benefit. But does it really fundamentally impact real estate companies positively? Let's pull up the components of the Nifty Realty. And of course, the Nifty Realty has come off its highs, was up nearly 3% at one point. But having said that, players like Godrej Property, Brigade had good numbers as well, still doing fairly well. Ramesh, keen to know your view on whether any kind of a pullback on indexation or any kind of softening, bringing back indexation when calculating tax gains on real estate, will that fundamentally change anything for these companies?
To be very honest, Tamanna, I don't think so.
Yeah.
So as far as somebody is buying a real estate property, it is not done for, immediate capital gains tax. Usually you hold a property for at least 15, 20 years before any change in, that can be any family planning or something like that. So this is not going to, move the needle at all for me. Companies have done well. Any luxury residential projects, whether it is launched in Delhi or Mumbai, they have been doing well. So, South has been a bit of a worry. Bangalore-based real estate companies has been a bit of worry on the affordable housing segment side. And the luxury housing, the beauty of that is they are not even interest rate dependent. No EMIs are involved in when you are buying those kind of properties. Having said that, most of these companies have moved up quite too far. 85 to 90% of the upside is already been covered. So the remaining journey on the stock price movement can be say 10 to 15%. if you have a time horizon of say 1 year or so. So for that, if you want to, add fresh longs into real estate, then it's a call. Otherwise, if you have already invested, stay put. I don't see a scare out there in this space at all. And the top picks in the segment remains, overall realty, TLF, and macro tech developers. These are the three companies which we find quite interesting with the value proposition which is still there on the balance sheet.
Aditya, any take on the real estate run-up that we're seeing today, and what have you made of some of the numbers that have come out in this pack?
Not really. I'm not too keen on latching onto the real estate pack, Tamanna, just after today's up move. I think most of the good up move has already played out in most of the real estate stocks. It will enter into some kind of a time-wise correction, if not price correction. Most of the names, you name it, be it a DLF or a Suntech or a Godrej Properties, I think give it some time for the stocks to correct, maybe some more, and have some kind of a time-wise correction before we latch onto it. If they definitely see some kind of a cool-off from here on, top bets within the space would be Godrej Properties, a DLF, and a Suntech Realty. These three definitely stand out for me. But let it settle down for some more time.
Kush, what do you make? Anything interesting on the charts for a sort of a medium-term bet from this real estate pack?
No, not really. In fact, I almost entirely concur with Aditya here. The technical setup's not as encouraging. The rebound that we've seen today is also really not as sustainable. So perhaps, Godrej Properties, on the rebound, or maybe once it settles, you could consider perhaps a prestige estate. But just a couple of names here and there, nothing too strong, nothing suggesting that, these have sort of hit the bottom or might reverse. So I will wait and watch on some of these names.
Okay, so wait and watch on real estate. Nothing too exciting, though it is up today on hopes of some relaxation on indexation. The other stock in focus is Vedanta. Vedanta reported its Q1 earnings. Profit and margins have beaten estimates. Revenues are in line as well. Mihika joins us for more.
So revenue saw mid-single digit uptick of 6%. EBITDA was up 55%. Margins have almost doubled, up 890 points, and net profit is up 54%. When you talk about what led to the higher earnings, there are four key reasons. Now, revenue growth was driven by the aluminium, zinc, lead, and silver segments, which both saw an annual revenue growth of 13% and 11%. Margins were supported by 5% lower power and fuel costs, and also an inventory write-back of 1,390 crores. And higher profit was due to tax write-backs of 735 crores during the quarter. When you talk about production performance, aluminium and zinc production was up 3 and 1% respectively, while iron ore and steel production was up 6 and 10% respectively on a year-on-year basis. The cost of production for aluminium and the zinc India operations have come down significantly. Aluminium cost of production is down 11%. This was due to lower commodity costs and higher efficiency. And zinc India cost of production has come down 7%. The oil and gas segment is one that didn't do very good. The production is down 17% year-on-year, and this is due to the natural decline in key reservoirs. However, the company is planning to inject $270 million of capex in Rajasthan to kind of revive the production up. When we talk about net debt has increased to 61,324. However, the net debt to EBITDA ratio has improved on a year-on-year basis. And as we know, the company has been trying to deleveraging itself, evident from its 8,500 crore QIP in July. And lastly, the FY25 capex guidance is unchanged at 1.9 billion, and the company has also approved a $280 million capex for the production capacity in Liberia.
Okay. Well, that's Vedanta for you, but no big reaction, and probably goes in line with the fact that metals haven't. I mean, yes, a couple of steel companies have done okay, but metals haven't really had a great move. Dharmesh, did you get a chance to look at the Vedanta numbers? And because there is a demerger plus a fundraise happened at 440, they've raised the capital as well. What's the view on the stock?
See, one view is very clear. The price is very expensive. It has risen up quite sharp. But today's this quarterly number, I didn't had a chance to look it into a further detail because of the markets, So next time when I am through with the numbers.
Fair call. Yeah, but let's see. And metals, the call per se hasn't the strongest. I would guess on the charts to the call for Vedanta would probably be the same. But the other one in focus is Tata Power. Is set to come up with the first quarter earnings today. And Mihika, what can we expect from this energy giant? I use the term giant because it's recently crossed the 150,000 crore market cap mark as well.
Yes, well, Bloomberg estimates, peg the revenue growth at 10.8% on a year-on-year basis to cross the 16,800 mark. EBITDA may fall flat around 3,004 crores. Margins could see a contraction is what estimates state, 17.8% versus 19.6% a year ago. However, net profit may rise 9.3%. When you talk about factors that could impact the earnings, and higher revenue could be because of the benefit from the drop in coal prices. Thermal and solar power generation is expected to grow, and the thermal power plants are also expected to clock into a higher plant load factor given the peak power demand that we did see in Q1 FY25. And the renewable power focus of the company could also, benefit the company in terms of earnings. One thing we do need to watch out for is the capex and expansion plans for the renewable energy segment that the company does plan to ramp up in terms of its total portfolio and asset mix.
Okay, so we'll wait and see what happens with Tata Power. Meanwhile, Blue Star numbers out. On the face of it, not looking bad at all. EBITDA up 64%. Margins have improved quite well as well, from 6.5% to 8.3%. The stock is still down, but improving as we speak. Net profit at 169 crores versus 83 crores. So this is not a bad quarter actually traditionally for Blue Star, right? You're in the summer months, so it's traditionally a good quarter as well. Revenues are up about 28%. That stock showing some improvement.
It's interesting. Cooling solution companies, Symphony, blockbuster quarter.
Blockbuster, yeah.
And Blue Star not too bad either. Look at the margin expansion out there. It's pretty stunning really what's happened here with both of them.
Yeah, I would be keen to see what happens with that. Even Hudson had good numbers, right? At least the business updates were good. I would be keen to see what some of the ice cream makers are doing, or some of the other, summer plays, and what happens there as well. But we've been talking about Tata Power. Aditya, let's get a quick take on Tata Power since we'll expect the numbers in some time from now.
Tamanna, I'm not too bullish here. I think most of the positives are already priced into the stock, and then you've seen a big ramp in the stock. At current levels, if I'm asked to put fresh money in Tata Power, no, certainly I would not. Maybe if you already own the stock at lower levels, play with a trading stop loss close to about 420 on the downside. If that is broken, maybe stock can slide all the way to sub 400 odd levels. Wait it out for some correction, cool off, and then maybe get into Tata Power. I see negative divergences on multiple time frame charts, so that tells me that the up move is now coming to a level when we can see a correction in the stock.
Aditya, you have not been bullish on anything today. I've just been noticing. Whether it's real estate or textiles. No, that's absolutely fine. Just wondering if that's an extended view of the market, or is there anything that you're finding worth your while today in the market?
Tamanna, I still believe there will be correction in the market for sure. And I think you will get better opportunities to buy.
Further correction is coming, you think?
Yes, definitely. And if I talk about correction, I specifically mean the broader markets. Okay, if I just throw some data points. If you take a look at the mid cap over Nifty and the small cap over Nifty, the ratios are trading at all-time highs. And if whenever that kind of a scenario has played out, you usually see an underperformance in the broader markets. And I feel this is just the start of a correction in the broader market, especially. You can hide maybe in some of the large cap names, could be in the pharma space, FMCG space, and the IT space. I think if you get more correction in IT, one should definitely look at IT, because we did a small study post-elections, which are the sectors which outperform 6 months. It's the IT Tamanna, which gives a return of 35% 6 months post-election. So if you get an opportunity to get into IT, maybe IT, FMCG, and pharma are the areas to hide. And overall, I think you will have bouts of correction in the market, especially in the broader markets.
Okay. So there is a bout of correction going to come. A correction definitely today in some of the defense names. It's not just BEML's less than exciting numbers. If you look at a Cochin shipyard this afternoon, a Garden Reach, I'm not sure what an HAL is doing, but everything down between 5 and 6%. Yeah, tough afternoon. HAL also down by just about 2%. Dharmesh, is defense out of favor as a sector for some time now?
No, not really. I mean, this is one sector where you can still go with a SIP method on every correction, and HL remains the top pick. I mean, this year itself, they would be delivering almost 14 LC aircraft to the government, to the Air Force Department, and that is a sizable chunk of it. Most of this revenue impact will come into recognition in the month of March, that is the last quarter. So This space is attractive. You have to be stock specific, and there I think HL, dissect system all needs good attention along with BL.
Well, so that's the view on some of the BML in particular, just versus the guided 25% to do 10%. No surprise that the stock is taking it on the chin. But it's not just BML, a clutch of other stocks taking it smack down today. Now, and Pankaj Tibrewal manages now a large fund at Ikigai, spoke about how with the markets trading at stretch valuations, his research and speaks about how much research will be required before going into certain sectors or actually even leaving out some of the sectors. Listen in.
Let's take example of few of these sectors where there's significant exuberance. I may not say that they may lead to permanent loss of capital, but there's significant exuberance. Let's look at the overall market cap of defense and railways today. The combined market cap is at 18 lakh crores. FY19, the combined market cap was 1.2 lakh crores. So 1.2 lakh crores moving to 18 lakh crores, which means a CAGR of 67% on market cap terms. Now look at the commensurate profit CAGR. Over the same 5-year periods, it's about 21%. So you had a 21% earnings CAGR, but a 67% market cap CAGR. The earnings multiples have expanded massively. Many of the names on the EMS platform, where there's huge narrative about electronic story and other things, many companies don't make cash flow. So if you add over the last 5 years cash flow of these operating cash flow of these companies, you don't get a comfort. They are either flat or marginally negative. Their profits are growing, accounting profit is growing, but commensurate operating cash flow is not, which to me is always a recipe for disaster, because top line is vanity, bottom line is sanity, but cash in bank is finally reality. So you did not, deviate from such basics, because whenever market slows down, if you're not generating cash flow and only accounting profit, it will hurt you. And finally, you need to fund your growth either through debt or diluting equity. So in many cases, we are seeing some of these kinds of companies are tapping the market on a 6 to 12 months basis with equity.
Well, and rule of elimination, try and figure out what not to buy versus what to buy alone. And that, I think, that would serve in a good stead too. By the way, we are now 82 points in the red, 23,973. Just a week ago, we were at 25,000. So it's been a far cry and a fairly swift pullback of nearly 4.5% or 4% odd already. The question is there more in store? Now, because the index has worsened further, Kush, you were of the opinion that this might fizzle away, this weakness, but would you have a trade on the bank Nifty, if at all, or maybe even the Nifty? Though the reason I say the bank Nifty is because that is down nearly 0.7%.
So first up, Niraj, let me just maybe clarify. I think my optimism was pitted against Aditya's cautious view. I don't believe that the worst is over. I just meant that the fall that we're seeing today isn't perhaps really as bad because we've got the expiry play coming in. So I do believe that there is still some downside left. In fact, we've been talking about 22,000 for a while now. So that's the broader picture. Do I have a short trade on the bank Nifty? For sure. As I said, midday when we, when I was on air, I said the same thing. Even now, I say the same thing, that the bank Nifty downtrend, is persistent. There has been an attempt at recovery, but, that's fizzled out. So I think, this could perhaps continue. 49,000 perhaps being, a near-term support zone. But I think any kind of meaningful support zone will come in at, 48, 200 odd levels. And then you're looking at the 200-day moving average, which is 47,600. So let's take each day as it comes. But yes, for sure, the weakness in bank Nifty is persistent. And if you want to take a short trade, the bank Nifty, is the index where you want to go ahead and do that. The reason being, Nifty somehow manages to find, one sector or the another, and then, doesn't really give that kind of a big down move that you want, if you're buying a put option. So bank Nifty persistent short trade could continue. Nifty, as long as it's holding above the yesterday's low, might perhaps consolidate for some time before giving way.
Kush, what are the calls for tomorrow? Any BTSTs or STBTs for tomorrow?
Sure. Tamanna, we've already discussed, I think, Hindalco short call and the UPA long call. Let me also add, one more short call to that, which is SBI Cards. Now, this stock has been under pressure. All attempts of revival have failed at the 200-day moving average, and how today we are seeing it below that 700 mark, which was, psychologically plus technically also a bit of a support zone. So I think this downturn could drag it to 689 and 680 kind of zones where any meaningful support comes in. 710 is your stop loss. You could take an STBT home in SBI Cards.
Okay. Meanwhile, Nilesh Shah of Kotak Mahindra's AMC is someone we spoke to today. Niraj, you had that conversation with Nilesh, and an interesting voice to get at a time when there's so much turbulence and flux in the market. Now, he's someone who's usually very, very bullish on the outlook. What was his take today?
Now, the interesting thing was, Tamanna, when he put out that message about how so many stocks are now relative to 2020 looking so far out into valuations and 2074, etc. I was of the opinion that he's trying to say that a lot more stocks are very, very overstretched, which he kind of alluded to. But he was saying that in some fashion that a lot of investors are comfortable betting on the long-term growth story of India. When asked about whether there could be a possibility of a severe correction as well or no, he wasn't quite sure of that. But one thing that he was sure of was that global investors will not stay underweight on India for very long.
Yeah.
So while domestic story is alive and kicking and money is coming in, and money will not just come in, and mutual fund investors will not invest just for the heck of it, he was very certain that global outflows that we're seeing will reverse very, very quickly.
Yeah, and you had massive global outflows yesterday, or foreign outflows yesterday. Listen in to what Nilesh Shah said.
So essentially, it was back of envelope calculation to show how market is far more forward-looking. There are about 359 stocks which have delivered more than 100% return since COVID low in BSE 500. There are more than 28 stocks today compared to 93 stocks in 2020 pre-COVID, which are trading at more than 50 years. That means they are discounting the earnings of company as much as in 2074. Third, we looked at returns from COVID days. The return for broad market was coming at 22%, whereas the 20-year return came at 14%. It meant that from 2004 to 2020, the returns were subdued. And then 2020 onwards, the return took off, which means that at today's valuation, one will have to moderate return expectation. So this was more of a back of the envelope calculation on BSE 500 to suggest how markets are far more forward-looking and extremely optimistic about future. Undoubtedly, if earnings growth continue their momentum, then these numbers will change. So limited point here, markets are optimistic. They are discounting future very, very positively.
Markets are optimistic and they're discounting future. We're in for some amount of turbulence for now at least. Aditya, I know you might not have an immediate strategy for tomorrow, but over the next couple of days, while you remain careful, what are the areas which you expect to see a rebound in?
Tamanna, we can see a rebound, like I mentioned, in an IT space. Could be some of the beaten down banks. I don't rule that out. A lot of these large cap banks haven't been performing. Take a look at ICICI, HDFC had a run up and then it clawed back. IndusInd Bank. I think these are some of the names which can actually see a good bottom formation over the next couple of days. And then you can see buying emerging in some of them. And IT, as I mentioned, one should clearly look out for the IT stocks, especially the large cap ones like an Infosys or maybe a TCS. If you get an opportunity to go long there, maybe start building portfolio around the IT stocks. And Tamanna, I do have a long trade as well in this market. BKG Food is something which is looking very interesting to me. It's not that all shots I have. So BKG is looking interesting to me. One can actually take a look at fresh long positions even at current levels. Look for a target of 785, 790 on the upside with the stop loss at 715 or 720 on the downside. This looks like a good trade to take for today. Maybe you can carry forward for tomorrow and rest of the week.
No issues if you have no long trades also, Aditya. Just you're just wondering what you find interesting. Yeah, BKG Foods definitely one to look at. Dharmesh, what would be your big strategy for tomorrow? Considering you've had one rough day of the week, one kind of recovery day, but a recovery that didn't really sustain.
I think Tata Motors, that looks pretty interesting after the recent correction which the stock has seen. And valuation-wise, it's very interesting. I mean, it does have a deep value at around 952,000 level. So it's almost there. So risk-reward ratio is favorable for it. And numbers and everything will come for Tata Motors, and the demerger story is still pending. So SOTP-based valuation is around 1350 to 1400. So that way, I think that's the top pick from our end.
Okay. So Tata Motors definitely one. Also an interesting call on Tata Motors. I mean, they have a new launch of their EV coming up. So there could be some buzz there as well. Tata Motors now in a positive territory. Any of the auto stocks that you like on the charts, Kush?
Well, I think it's time to be a little cautious on, the auto names. Maruti, given what it had, in terms of numbers it had done, wasn't really able to hold that 13,000 mark. M&M, we do continue to like, but even that is reeling under pressure and below key averages. I think I'll go with Tata Motors only, purely because, as even Dharmesh said, the risk-reward ratio looks favorable from here. The averages are still respected. So I think, given the kind of support zones that it is respecting, I think Tata Motors is still, a preferred bet. A positional stop on this one comes in at about 975. So as long as that is held, you could consider a buy on dip strategy on Tata Motors.
Okay, Kush and Aditya, thanks so much for joining in and giving us your thoughts. Really appreciate your time today. Just want to mark Akum's Drugs. It's the new kid on the block, and currently about 17% higher as we close. Just want to mark the intraday of that one and see what's that's doing. Okay, 118 odd points higher, 797. I believe it's slightly higher than where it made the debut. So it was a 6% uptick on debut and then has perked up further. Dharmesh, very quickly, any view on the new listing today?
No, we have a neutral rating for them.
Okay.
Okay, all right. So no big shakes on Akum's Drug right now. Meanwhile, the Ola IPO is also closed, about 3.5 times subscribed on its last day of close. These are some of the sectors to look at. But since we're talking about pharmaceuticals, Aditya, everyone's favorite defensive play, do you think pharma is one to look at? Dharmesh, do you have a view on the pharma play?
Which one?
Pharma play.
No, pharmacy, Tamanna, because of this turbulent market, people are preferring to defensive bet. But in equity, we are here to make good returns. So I don't think any of the pharma stock has this potential to give 20-25% return, say, next to 1 year time frame. So most of them have already run up quite a bit. And the numbers were okay. I mean, there was no problem with the numbers out there, be it even the pharma, Sunpharma and the likes. But we have not been recommending them as a fresh buy or a fresh investment bet. In fact, we have recommended to book profit on some of them.
Okay, Dharmesh, Kush, thank you so much, gentlemen, for joining in. And big news on your screens, by the way. We are assured a silver in the javelin throw because Niraj Chopra is qualified for the Olympic men's javelin throw finals. So I would suspect that he will go for the gold and he will get the gold. So, well, great going out there, and that's good news on your screen. But 23 seconds left. Let's just wrap up the trade very quickly. I mean, we're ending flattish. So a bit of a disappointment relative to how we started off. But if you look at what happened yesterday, maybe extreme volatility was anticipated. We didn't quite get there, but yes, certainly in the red. And just one name from my end before we quickly sum up what's happening in the BSE 500, or one chart, which is India VIX. Just want to pull up India VIX and see what's happening to volatility. It's come off quite rapidly today. So a bit of a sedate day today. Remember, not very choppy. but maybe indicates that volatility is the name of the game. But large caps, even Stevens, maybe the bigger moves have at the broader end of the spectrum, Tamanna. So the BSE 500 winners and gainers list a lot more apt today.
Yeah, absolutely. And that's one to look at. We'll also see where broader markets are closing in just a few seconds. But, I would say when you're seeing Cochin Shipyard here, there are a lot of defense stocks which have been hurt today and have come off. Marico numbers were actually not half bad. So could be the Bangladesh factor we've been talking about, or others which have seen a pain. Blue Star actually had a pretty decent set of numbers. So saw a buzz up and then a quick bout of profit booking coming there on Blue Star. So that's made it to the top losers list as well. On the winning side, Symphony, which is in the same space and has also had a good quarter, is up 19%. KPR Mills, again, with a lot of textile stories have been buzzing today. You're probably going to see that in the hope that manufacturing for global retail fashion brands moves to India, since Bangladesh is having some strife right now. Brigade Enterprises, good numbers and has been a winner through the day. Last 3 sessions, Serra Sanitary has bucked the trend, even on Manic Monday. And that's one to watch out for. But really, that's all the time we have on this edition of India Market Close. So from Niraj, me and the team that put this show together, thank you so much for watching. We'll see you back tomorrow morning on India Market Open. But meanwhile, stay tuned. A lot more coming up on NDTV Profit.